Hey everyone, welcome back to Corporate Decoder. Today we're diving deep into Matson Incorporated's quarterly report, where it looks like things are a bit of a mixed bag with some strong currents and some choppy waters ahead. So buckle up if you love getting the real story behind financial reports. Make sure you are subscribed and consider joining our Discord community, linked in the description below for more in-depth discussions. Alright, so we're looking at Matson Incorporated's Form 10Q filing for the quarter ending the 30th of September 2025. This is basically their check-in on how they're doing financially, covering the July through September period. Scroll Matson, Inc., and subsidiaries condensed consolidated statements of income and comprehensive income. Scroll. Let's jump straight into the numbers from their income statement. Scroll operating revenue, ocean transportation, $718.3. Scroll first up, ocean transportation revenue for the third quarter of 2025. It came in at $718.3 million. That is down from $798.7 million in the same period last year. So we're seeing a drop of about 10% there. Scroll Logistics, $161.83. Scroll, then we have their logistics segment, which brought in $161.8 million. This is slightly down from the $163.3 million they made in the third quarter of 2024. Scroll total operating revenue, $880.1 Scroll overall. Their total operating revenue for this quarter was $880.1 million. That is a noticeable decrease from $962.0 million in the same quarter last year. This 8.5% drop is significant and tells us they are bringing in less money overall. Scroll operating income, 161.0 Scroll. Now, let's look at operating income. This is the money they make from their main business operations before adding in things like interest and taxes. For the third quarter of 2025, operating income was $161.0 million. This is a pretty big drop from $242.3 million in the third quarter of 2024. That is a decrease of over 33%, so their core business is definitely bringing in less profit this quarter. Scroll net income, $134.7 Scroll. When we get down to net income, which is the bottom line, it was $134.7 million for the quarter. Again, this is lower than the $199.1 million they reported for the same period last year. That is a drop of over 32%. Scroll basic earnings per share, $4.28 Thiders. Scroll and for earnings per S hair. Basic earnings were $4.28, down from $5.98 last year. Diluted earnings per S hair also decreased to $4.24 from $5.89. This shows that for every share of stock people own, they are earning less this quarter. Scroll Matson, Inc. and subsidiaries condensed consolidated balance sheets. Scroll, let's flip over to the balance sheet, which gives us a snapshot of what the company owns and owes. Scroll total assets, $4,602.1 Australian. Scroll total assets stayed pretty flat around $4.6 billion for both the 30th of September 2025 and the 31st of December 2024. This means the company's overall size in terms of what it owns has not changed much. Scroll total liabilities and shareholders' equity, $4,602.1 Scroll on the other side. Total liabilities and shareholders' equity also stayed similar at about $4.6 billion. Scroll total current liabilities, $540.6 twin Scroll current liabilities. The debts they owe within a year were $540.6 million. Scroll total long-term liabilities, $1,372.2 Scroll, and their long-term liabilities, debts due in more than a year, were $1.37 billion. So, they have significant debt obligations. Scroll total shareholders' equity, $2,689.3 Scroll shareholders' equity, which is what the owners have in the company, was $2.69 billion. This is a healthy number, indicating the company is worth more than its debts. Scroll Matson, Inc. and subsidiaries condensed consolidated statements of cash flows. Scroll. Now let's look at their cash flow statement. This tells us how cash is moving in and out of the company. Scroll 9 months ended the 30th of September. 2025, 301.7 Scroll for the 9 months ending the 30th of September. 2025, net income was $301.7 million. Scroll 2024, 348.4. Scroll, this is lower than the $348.4 million they reported for the same period in 2024. Scroll net cash provided by operating activities, $370.2 Scroll cash provided by their operating activities was $370.2 million for the first 9 months of 2025. This is down significantly from $593.1 million in the same period last year. This is a crucial figure as it shows how much cash their core business is generating. A drop like this suggests their operations are less efficient at producing cash. Scroll net cash used in investing activities, $236.4 Scroll in investing activities. They used $236.4 million. This is mostly due to building new vessels and other capital investments. Scroll net cash used in financing activities, 307.9 Scroll, and in financing activities, they used $307.9 million. This includes debt repayments, dividends paid to shareholders, and most notably, significant share repurchases, where they spent $225.8 million buying back their own stock. Scroll cash and cash equivalents and restricted cash, end of the period $92.7 Scroll. The result is that their cash balance dropped quite a bit. At the end of September 2025, they had $92.7 million in cash and cash equivalents, down from $266.8 million at the start of the year. This decrease in cash raises a flag about their liquidity. Scroll portable segments are components of an enterprise that engage in business activities from which it may earn revenues and incur expenses, whose operating results are regularly reviewed by the Chief Operating Decision Maker, COD9, to make decisions about resources to be allocated to the segment and assess its performance, and for which discrete financial information is available. Scroll, let's break down how their two main business segments, ocean transportation and logistics, perform. Scroll 3 months ended the 30th of September 2025 ocean transportation $718.3 Srating. Scroll and ocean transportation. Revenue for the quarter was $718.3 million, down from $798.7 million last year. This was driven by lower freight rates and volumes, especially in their China service. They mentioned that tariffs and global trade uncertainty have impacted this. Scroll Logistics 161.86 Scroll Logistics revenue was $161.8 million, a slight dip from $163.3 million a year ago. This segment saw lower contributions from freight forwarding and transportation brokerage. Scroll Ocean Transportation 147.4 Scroll operating income for ocean transportation saw a significant fall from $226.9 million last year to $147.4 million this quarter. That is a 35% decrease. Scroll Logistics 13.6, Scroll the logistics segment also saw its operating income drop from $15.4 million last year to $13.6 million this quarter. Scroll volume 40-foot equivalent units, view 1 Hawaii containers 36,340 Scroll. Looking at volumes, Hawaii containers were up slightly, a positive sign. Alaska also saw a small increase. However, China containers were down nearly 13%. Reflecting those trade tensions we just mentioned. Scroll 9 months ended the 30th of September. 2025 ocean transportation $2,031.3 Scroll for the 9 months ending the 30th of September 2025. Ocean transportation revenue stood at $2.03 billion, a slight decrease from $2.07 billion in the same period last year. Scroll Logistics 461.3 Scroll Logistics revenue for the first 9 months was $461.3 million, also a slight decrease from $463.9 million last year. Scroll Ocean Transportation 319.6 Scroll Ocean Transportation operating income for the 9 months was $319.6 million. Down about 12% from $363.5 million last year, Scroll Logistics 36.57 Scroll and Logistics operating income for the 9 months was $36.5 million, lower than the $40.3 million from the prior year. Scroll Matson, Inc. and subsidiaries notes to the condensed consolidated financial statements. Let's touch on some of the risks. Matson operates under the Jones Act, which requires us ships to carry goods between us ports. They mention a lawsuit challenging this act, and if it were to be repealed or significantly changed, it could allow foreign competitors to enter their markets with lower costs, which would be bad for Matson. They also emphasize that they must maintain their status as a US citizen operator, meaning foreign ownership of their stock is limited. Scroll changes in macroeconomic conditions, geopolitical developments, or governmental policies, including due to outbreaks of disease, have affected and could in the future affect the company. Scroll, they also highlight risks from global economic issues, trade tensions, and tariffs, particularly between the US and China. These factors have already hurt their China service and could continue to do so. They are also worried about how weakening economies in Hawaii, Alaska, and Guam could affect demand for their services. Imagine tariffs and trade wars directly impacting shipping volumes. It is a real domino effect. Even the price of oil is a risk for their Alaska business. Scroll, the shipping industry is competitive, and the company has been and may continue to be impacted by new or increased competition. Scroll competition is a constant threat. New players or existing ones adding more ships could lead to too much capacity, driving down prices and hurting Matson. Scroll, the company's operations are susceptible to weather, natural disasters, risks arising from climate change, maritime accidents. Spill events and other physical and operating risks. Scroll being a maritime company, they are exposed to the whims of nature and the sea. Extreme weather, rising sea levels due to climate change, and potential maritime accidents are all significant concerns. These could lead to service disruptions, damage to assets, and increased costs. They even mention that sea level rise can impact the island communities they serve, potentially reducing demand. Scroll for companies' fleet upgrade initiatives, which include the use of LNG fuels, may not be timely or successful, potentially leading to significant costs and impacting their climate goals. Scroll, they're investing heavily in upgrading their fleet, including ships that can run on LNG or liquefied natural gas. While this is a move towards cleaner energy and sounds good, they admit there is no guarantee these upgrades will be timely or successful, and that they might face unexpected costs. Plus, ensuring a stable and affordable supply of LNG could be a challenge. Matson, Inc. and subsidiaries condense consolidated statements of shareholders' equity. Scroll, looking at their statement of shareholders' equity, we see how the company's ownership structure has changed. Scroll shares repurchased 0.5 Scroll. They continue to buy back their own stock. For the 9 months ending the 30th of September 2025, they spent a whopping $229.3 million on share repurchases. This reduces the number of shares outstanding, which can boost earnings per share, but it also uses up a good chunk of cash. Scroll dividends $0.34 per share, 11.3. Scroll, they are also returning capital to shareholders through dividends, paying out over $11 million in dividends for the 9 months of 2025. Let's talk about cash and their ability to meet short-term obligations. Their liquidity. Scroll cash and cash equivalents $92.7 Scroll. As we saw, their cash and cash equivalents significantly decreased by $1974.1 million during the first 9 months of 2025. Bringing their cash on hand down to just $92.7 million. This is a notable drop, especially when you consider they have recurring debt payments and significant planned capital expenditures for new vessels. Scroll total debt, excluding deferred loan fees, $370.9 Scroll. Their total debt stood at $370.9 million. While this appears manageable against their assets, it is important to note that this is primarily fixed rate debt. Scroll as of the 30th of September 2025, the company had $544.0 million of remaining borrowing availability under the revolving credit facility. Scroll, importantly, they have a revolving credit facility which is like a safety net for borrowing money. As of the 30th of September 2025, they had $544 million available under this facility. This provides them with some crucial flexibility. Scroll total capital expenditures for the full year 2025. The company expects to make other capital expenditure payments, including maintenance capital expenditures, of approximately $130 million, new vessel construction expenditures, including capitalized interest and owner's items of approximately $248 million, and dry docking payments of approximately $45 million. They expect to spend around $130 million on general capital projects, a massive $248 million on building new vessels, and another $45 million on dry docking and maintenance. This is a substantial outflow of cash that will need careful management. Let's dive deeper into the risks. A big one is the Jones Act uncertainty. They mention a lawsuit and the potential impact if foreign competitors were allowed in. This could seriously shake up their domestic shipping business. Scroll heightened security measures, war, actual or threatened terrorist attacks. Efforts to combat terrorism and other acts of violence may adversely impact the company's operations and profitability. Scroll, they also flagged the ever-present risks of war, terrorism, and other geopolitical events. These can throw global supply chains into chaos, affect demand, and even lead to government control of their vessels for military use. It is a reminder that the world stage directly impacts their bottom line. Scroll, the company, faces risks related to actual or threatened health epidemics, outbreaks of disease, pandemics, or other major health crises, which could significantly disrupt the company's business. Health crises like pandemics are still a major concern. They acknowledge that these events can disrupt economies, reduce tourism, and cause significant problems for shipping and logistics. Scroll work stoppages or other labour disruptions caused by the company's unionised workers and other workers or their unions in related industries could adversely affect the company's operations. Scroll labour relations are a key risk. With many unionised workers, the threat of strikes or slowdowns could seriously disrupt their operations, just as it has in the past. So, What is the big picture here for Matson Incorporated? On one hand, they operate in essential services like shipping to Hawaii and Alaska, and their logistics segment provides crucial supply chain services. They're also investing in cleaner, more modern vessels, which is good for the long term and aligns with global sustainability trends. However, the drop in revenue and profits this quarter is concerning. It signals that they are feeling the pinch from global trade tensions, higher interest rates, and a softening economy. Their cash position has also decreased significantly, making their access to credit lines and their overall liquidity something to watch closely. The substantial capital expenditures planned for new vessel construction, while necessary for fleet renewal, will put further pressure on their cash flow. The risks associated with the Jones Act, geopolitical instability, and potential labor disruptions are ever present and could significantly impact their business. In essence, Matson seems to be navigating a challenging economic environment. While their core business remains vital, the current pressures are clearly affecting their financial performance. Their strategy of fleet modernization is a positive step, but the immediate future looks like it will require careful management of costs and cash to weather these storms. That is our take on Matson's latest financial report. What are your thoughts on these numbers and what they mean for the company's future? Let us know in the comments below. If you found this deep dive valuable, please hit that like button. Subscribe for more corporate breakdowns. And don't forget to join our Discord community linked in the description. Thanks for watching, and we'll see you on the next episode of Corporate Decoder.